And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. The ETF world, like much of the investing world, is trying to understand what impact artificial intelligence and ChatGPT in particular will have on investing, from picking stocks to how it will impact employment in the investing world. Joining us now, two experts in using AI in investing. Art Amador runs the AI-powered ETF, the symbol's AIEQ. It's an actively managed fund of stocks selected with a model that uses artificial intelligence. And Bill Studebaker, he's the head of the global robotics and automation ETF, Robo, also well-versed in AI in the marketplace. Art, let me start with you. We're trying to figure this out. The investing world is trying to wrap its head around ChatGPT, but you've been using AI for years to pick stocks. I think since 2017 you've had this ETF. So tell us what's the similarity between you and ChatGPT. What is the difference? And is ChatGPT some kind of watershed moment?
Yeah, absolutely. So ChatGPT is an incredible milestone, right? The ability to generate AI. The difference, though, is in the knowledge base and how they're, and so for example, right, ChatGPT knows a lot about a lot of things, right? But if you ask it to put together a portfolio or anything highly sophisticated or technical, it's unable to do so. So that's really one of the main differences. Is we've focused and applied AI specifically to understanding the critical signals in the marketplace and went very deep, where ChatGPT is very broad in nature. But the interesting thing is, at the heart of both what we're doing, we've kind of attacked the problem in a similar way from a technology standpoint. We've built a convolutional knowledge graph, which is what ChatGPT is using, which is a graphical database that unites structured and unstructured data and connects relationships between different concepts, entities, and events. And we're using these deep learning models to make predictions. And then these predictions, right, are measured. And then the information flows back to the powerful knowledge graph, which is probably one of the most powerful tools in AI at this time. And so it will continue to get better and improve over time.
Yeah, it's a good point. So, Bill, let me turn to you. ChatGPT hit something like 100 million users in 2 months. And I'm just trying to figure out what's the effect going to be on businesses, not just finance, but business in general. We had talked about this earlier. The iPhone launched an enormous app business worth hundreds of billions of dollars. Is this going to happen with ChatGPT? Is it going to launch a multi-billion-dollar businesses, or is it going to lead to a bunch of layoffs?
I think this is definitely not a fad, and I would argue that this is, as you just said, it's kind of an iPhone moment. And I think as the field of AI continues to advance, we're moving into kind of uncharted territory. And artificial intelligence is certainly the buzzword in the market now, really thanks to a wave of sort of viral applications such as ChatGPT, which have captured the public's imagination. And this tool and many others demonstrate really the quantum leap that's taken place over the last few years in AI and what it's capable of. When we launched Robo nearly a decade ago, we had a view and vision that we were on the cusp of ubiquitous automation. But fast forward to 10 years later, we couldn't be more convicted. And this wave of innovation, I think, is set to hit the world of business and really redefine what's possible. And as Art kind of talked about, the most transformational companies are those that are going to be able to achieve sort of real-time AI. And so all AI is powered by information data, and real-time data is the most valuable of all. So if you have the ability to synthesize and understand the data, you're going to be pretty successful.
So, Art, I'm going to go back to investing. What's the implications for investing? So you've got this AI-powered ETF. It picks stocks on a proprietary model, but when I'm talking to you over the years about this, it uses pretty conventional signals, it seems like, fundamental signals, technical signals, headline frequency. I do that. So what does AI do for investing that human analysts can't do?
Yeah, so you're absolutely right. So the signals are in some ways traditional, right? So it signals across fundamentals, macro, technical, news, right? But the critical thing is to understand which signals are critical for which companies. So for example, GameStop is a top 10 holding, right? So for GameStop, a critical price driver might be something like news and social sentiment, right, and headline frequency, where another top holding would be Citi, for example, and it uses, maybe the critical drivers are inflation, right, and interest rates. And so we're trying to understand, right, what are the critical drivers for each particular company. Now, the beauty is, right, is that all of these different companies are connected in very complicated ways through different value chains, right? They're customers, there's different themes like metaverse and AI. And so what AI can do is it's more efficient, right? It's faster. So instead of having 10,000 research analysts and them together trying to put together the picture of the market, right? What AI can do would be like 10,000 virtual analysts, and what is known by one analyst can be known by all analysts instantly.
So, I mean, this is an important point you're making here. And maybe, Bill, you can respond to this. He just said 10,000 analysts. Instead of 10,000 analysts, you got ChatGPT or AIEQ. So there's hordes of people making stock recommendations on Wall Street, picking stocks. Is this a threat to their livelihood?
Yeah, I don't know, Bob. I think it's going to take time for this to play out. I certainly think that if you're able to remove emotional human decision making, it probably is going to be additive over the longer term. I mean, active management struggled because people sell what works, they sell what doesn't work, and they're stuck with what's in between. So the extent that we can kind of eliminate some of the noise and take the emotion out of investing. I'm not an expert on this, but I think that there's probably a lot of opportunity in the years to come as the technology gets more and more refined, and obviously the data can sort through various correlations, and obviously there's certain factors that work in the market, and then certain factors that don't. And the important thing is not to look in the rearview mirror when investing, but to look forward. So the extent that these technologies can help you sort of navigate what's coming, I think is going to be very disruptive.
Yeah. I want to drill down a little bit more on how you pick stocks, or how your AI picks stocks. And I look at your largest holdings here, Novavax, AIG, Las Vegas Sands, AbbVie. I don't particularly see a common thread, but maybe that's the point. It's not a tech fund. It's not necessarily a momentum fund, although it uses momentum. Explain how this program picks stocks.
Yeah, absolutely. So it's more of kind of a bottoms-up approach, right? What we care about is the critical signals for each one of these, individual companies. And so we extract these signals from various data sources, millions of global news articles, social media posts, research reports, TV transcripts. We combine this with other kinds of data, economic data, market data, and financial statements on over 5,000 publicly traded companies. We then use all this data and signals, right, to make price predictions on the entire universe, right, to see where the stock is going. And then the 140 names that have the highest potential of appreciation or the highest expected returns, those end up going into the portfolio. And then as we walk forward in time, right, those price predictions are measured against the actual returns. And then the system then learns from those predictions so that the subsequent predictions can be even more accurate than the previous ones.
So this all sounds great, but how do I measure this? I mean, what benchmarks do I measure it against? Do I measure it against the S&P 500? How do I know you're doing better or not better? Get my point here?
I do. So it's a total market approach, right? So it looks at 5,000 different companies. And it's having an exceptional day today, and it's outperforming the broader market, in 2023 here. But the thing with AI and machine learning, Bob, is I think we're not looking at it the right way, right? You're talking about past performance, right? The beauty of this is that we're just in the first inning. These systems, right, AI, machine learning, it's continuing to evolve, right? It's going to improve. So whether we're talking about ChatGPT, right, your iPhone, AIEQ, its best days are still ahead of it.
But we're in an arms race, right? I mean, that's sort of the problem I have with this. It used to be, you know, we used to try to find the best analysts 30 years ago, and now everybody's got the best analysts. Information is very evenly distributed. So suppose we get AIs that pick stocks, they're all going to be, there's an arms race of all AIs. I guess the question is, I'm going back to, why don't I just buy the S&P 500? I'm not sure what I'm getting when I do this. I love the idea around the concept of doing this because the AI can see stuff I can't see. I made fun of this earlier with you about, you know, I can pick stocks, I can do fundamental and technical analysis, but what I can't do is surf through millions of pieces of data and find the signal in the noise. I might likely miss that because I can't analyze it as much. I'm just trying to figure out where does all of this sort of go. If we all have an AI, you know, stock picking assistant in the next 10 years, is that really going to lead to anybody's outperformance, or does it? What are we looking for at that point?
Yeah, so not AI is, you know, created equal, right? And people have different approaches on AI, right, and how to use it, and different technical structures, right? As I mentioned, right, our technical structure using things like knowledge graphs and deep learning models can be very different than the way someone else kind of approaches the problem, right? So you want to make sure when you're investing, right, that you're investing with people that have done this before, that have deep expertise and deep knowledge in this space, right? So that way you're getting the best AI possible. And that's why we've partnered with some of the best companies out there like IBM Watson to ensure that we've got the best AI and that we're unlocking these investment opportunities for investors. And I love the ETF format because anybody can buy it, right?
Yeah. Right. And how often does AI EQ rebalance?
So it's data dependent. It's an active fund, and it can rebalance daily. And I would say most days it probably does.
Okay. Bill, let me dive a little deeper into your Robo ETF. This tracks a global index of companies involved in robotics and automation. How does the ETF pick stocks, or how do you pick stocks, and where does AI fit in right now with robotics and automation?
Well, I guess we kind of still do a little bit of the old school approach. I mean, we sort of pride ourselves on being industry experts. We have a team of 7 PhDs in our team, some of the world's renowned thought leaders and entrepreneurs that have built businesses, and they were very helpful in the early days of helping us create the ecosystem to invest in robotics and AI. Because when we started this 10 years ago, you know, we recognized that there were some pure play, you know, companies, but there wasn't, you know, kind of a GICS classification system for them. So we had to go and produce that. So we came out and defined a company as either a technology or an application. So the technology is what makes an autonomous system work. The computing, the AI, the processing, the sensing, the actuation, and the integration of those technologies. And then the use cases, so where is robotics being deployed? Well, we knew it was in industrial manufacturing, you know, how about into healthcare, into ag, into security and surveillance, you know, into healthcare and others. And as the use cases evolve, those sectors would obviously evolve. And so we go out and we basically invest in what we believe are the best-in-class companies. We do essentially a proprietary ranking where 50% of our ranking is to identify companies that have high revenue purity, and the other 50% we do a deep bottoms-up analysis by looking at their market share leadership, their technological leadership, and understanding where and how they're investing. And that's a difficult component to just capture through an AI, because you have to understand their businesses and where they're investing their R&D, look at where they've invested in buying companies and what their ROIs have been and what their track record is for integration, et cetera. And so we then apply an ESG screen to this, and that out pops an investable universe, and we take the top names from there and then put it into a ETF wrapper.
You know, you're robotics. So robotics was, I mean, I'm a science fiction fan. I grew up reading science fiction. I still do. And the robots are stealing our jobs, stealing our souls. This is one of the oldest tropes in science fiction. There are stories going back to the 40s about this. I guess, does this somehow have more currency these days? Are robots stealing our jobs? It seems to me if robots are stealing our jobs, they're doing a pretty bad job of it. There's more jobs than people are at the moment. Can you address that old trope, the robots are stealing our jobs, and it suddenly hit a singularity?
You took my line, Bob. I like it. I think it's true. If you look at the companies and the countries that have the highest utilization of automation, guess what? They have the lowest unemployment rates. I mean, if robots are stealing our jobs, go figure. We have 11 million unfilled job listings in the U.S. If you look at the density of robots globally, there's going to be about 3.4 million industrial robots installed by the end of this year. That is in comparison to a global economy that employs about 500 million in manufacturing employment. So we have a long ways to go. If you think about the number of data scientists and people that are trained in AI globally, it's a de minimis figure. I think it's going to take a long time for this to happen. But more importantly, what's coming out from robotics and AI is better productivity. I mean, we went into the pandemic and came out of the pandemic with 1% higher GDP with 6.5 million workers, okay? That is the definition of productivity. And I think that you're going to see a tsunami effect in terms of prices coming down as a result of deflationary pressures from these technologies. And I can't predict everything, but I have high confidence this is going to be very additive to our economies globally, and importantly, just generating new growth.
So you think AI will create deflationary effects? Did I understand you correctly?
Yeah, because look at what's happening. I mean, we're at an undeniable inflection point because of the price or our computing capabilities and the cost of computing, which has plummeted. It's now created an array of use cases that a few years ago was only Elon Musk science fiction. So it's all about lowering costs and providing more ubiquity of service and product, et cetera. And you look at what's happening in e-commerce. I mean, there is an arms race to create better fulfillment and have lower inventory shrinkage and everything. Everything results in basically having more product out the door at a lower cost. And so inevitably over time, I think these are very powerful technologies that are very disruptive.
In terms of, let's go back to robots, not worry about AI. Is robot deployment accelerating? Is there a way to measure that? You know my question. Are we reaching some point where suddenly there's been a big increase in the use of robots in the last few years? Or
the International Robot Federation releases data yearly about the deployments, and it's I would say it's somewhat measured. I mean, it's roughly around 15%. I mean, no one wants to go out and add too much capacity too quickly and then find out that maybe the industry is a little more cyclical than they might have thought. I mean, these are clearly, heavy, intensive capital deployments. When you look at the companies that supply the actuation, that's what makes the robot move with sub-millimeter accuracy, semiconductors, et cetera. There's a lot of supply chain that's tied in that also has a very measured approach to their capacity and growth. So while I wish that the industry was growing 50% per year, that's really not the case. I would say somewhere in the low to mid-teens is a good way to sort of think about the growth.
So Art, what's next here? I mean, what I notice here is ChatGPT is going to keep getting better, but what else beyond that? So out there is quantum computing, for example. Is that going to be commercially viable, in your opinion, in the next few years, and where would that fit in?
Well, things like this always happen a lot sooner than you think. And we did partner with IBM, who's made some great strides in this space. And quantum computing is it's possible that it may unlock or solve some of the world's most complex problems. And when you think about the markets, right, the markets are extremely complicated, right? There's all of these very complicated relationships between different companies and events, right, that are occurring. And something like quantum could unlock many possibilities for investors. And so, we're already kind of planning and thinking about how we could apply something like that to the investment space, right, and really unlock these investment opportunities for investors. And it gets me really excited, right? There's been some incredible milestones. You had Watson Jeopardy challenge. You had Google DeepMind. Now we got ChatGPT generating language. Quantum might be the next watershed moment.
Yeah, I think it's very important to point out about ChatGPT. There's been a lot online mocking ChatGPT, which I find amusing. So it's very typical to somebody post something and say, look, I asked ChatGPT for, the 5 best restaurants in Bologna, Italy, and one of them came back in the wrong city and the other one didn't exist. And isn't this stupid? And the thing that I think it's important that people don't seem to get, these mockers, is these systems learn very fast. And the next iteration, 4.0 or 4.5, 4.50, isn't going to make those mistakes. And while we're getting older every minute, it's getting smarter every minute. So it's quite remarkable to me, I think, and I think people are going to be shocked when they see the 4.0 come out, and even more shocked when the 5.0 comes out. I don't know if it's going to be 1,000 times more powerful or 100 times more powerful, but it's certainly going to be more accurate than the current 3.5 version. And I think people have not really thought through the implications of something that's, 10 times more accurate, 1,000 times more knowledgeable than something that existed a year before. And I think people are going to be quite surprised. And those kinds of mocking, you see, it didn't give me the right restaurant, are going to go away sometime in the next year. I don't know if you have any thoughts on that, guys, but am I on target or am I off base?
Oh, the beauty, right? So if you use ChatGPT, I typed in, what is the future of investing, right? And it gives me the response. And then I either like the response or I dislike the response, right? And then after I've liked or disliked it, even if I've liked it, it says, well, what would have been a better response? So while people are mocking this, right? There are millions of users. Those millions of users are actually training the system to make better responses into the future. It's absolutely incredible. And you're right. This is going to advance very, very quickly before anyone, a lot faster than many people think.
Yeah, and it's listening to people. And it's learning from people. I'm hoping, I don't know how to do this, to write like a blooper reel for ChatGPT, stupid things that people said to ChatGPT. I'm quite sure there's hundreds of people who have fed their tax returns to GPT, asking it to find some tax loophole or some way it can reduce its taxes. Like, talk about, stupid ideas. I think I'm going to feed my tax return to, an artificial intelligence system. I guarantee you this has happened. I don't know how to write that blooper reel because I don't know how to get access to that information, but I'm quite sure that it's going to happen. Gentlemen, this has been a fascinating discussion, and we're going to continue it in the next few months. I'll have you back for sure. But for the moment, I'm out of time. That does it for this week's ETF Edge. My thanks to Bill and Art. Now, we've asked Art to stick around to chat just for 5, 6, 7 more minutes on AI and investing for the ETF Edge podcasting. That's coming up right after this. And remember, you can see all of our shows on our website. That's etfedge.cnbc.com, etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.